Andrew Sullivan, Principal Sales Trader at Piper Jaffray, Asia Securities. Many thanks for braving the storm, Andrew. First of all, for those who are looking at the Hong Kong trading situation, it's 11:15 in the morning here.
Yeah.
What happens now? Because it's a Typhoon 8. It isn't that strong, to be fair, out there. But
well, the typhoon is really on the proximity of it, not on the strength of the winds, although that's a consideration. The reason they're raising it early is that a few years ago they were a bit late and we had a direct hit which killed a number of people, so they're obviously cautious. For the markets, it means that actually if the typhoon signal doesn't come down, if it comes down to 11:30, then by 11:30 then the afternoon session starts as normal. If it doesn't come down until just before 12, then we don't start the afternoon session till 2 p.m. But if it doesn't come down until after 12, then there'll be no trading in Hong Kong, which will make tomorrow interesting because it's futures expiry day today, and if the market doesn't open, then futures expiry happens on the next day, which will then coincide with the end of the quarter, so it could make for quite choppy trading.
so let's say that it doesn't open today. Tomorrow, how do you position yourselves ahead of what is going to be a choppy day?
Well, I mean, the problem a lot of people will have is they position themselves for today with the futures expiry. Obviously, we've had a sell-off overnight in the US, which I think a number of people were expecting, looking at the way the market traded yesterday.
It's happening, isn't it, after 1 p.m. US time?
Yes. I mean, it's, people I think have been becoming more and more sceptical about the EU bailout plan. The fact that some of the minority countries are probably objecting, they want the bondholders to take a bigger haircut. It's going to come down to negotiation, but it's not going to happen quickly.
Overall then, end of the quarter, look forward to the fourth quarter. I've been talking about this historically, 29, 87. It's a pretty brutal month, looking back at the market history. What are you, your desk, planning? Well, I think you can't really plan, can you, to be fair, but...
I mean, at the moment, yes. It's not really about fundamentals, it's all about news flow.
Yeah.
And that makes it very, very difficult. So it's just a matter of being positioned in large liquid stocks that you can get in and get out of quickly. Positioning in your futures and with your options is probably most people's trading strategy. For the longer-term funds, though, the long mutual funds, I think they'll still be looking at those companies that are good fundamental companies that they like, and if they've got cash coming in, they'll look to acquire those at, at low values.
Big question, is this market, Andrew, terrified?
Well, I was at a lecture the other day, and they always say that fear outweighs greed. And in the sell-offs that we've seen when they've happened, yes, I mean, that's obviously... I don't think terrified, I think very, very nervous. And that's why you're seeing a lot more people probably more active in the futures and options markets than they are actually in the equity markets. Just because there's more liquidity, you can get in and out, and you don't have to try and pick the individual stock that's going to do well that day.
And clearly also the ban on short-selling extension in Spain and Italy doesn't really help that either.
Well, it removes liquidity. I mean, you may not like short sellers, but they do provide a part of the market that's essential. And they're just taking a view, and sometimes they're wrong. So, it's not always that they make money. Certainly, if you looked at the beginning of this year, anybody that was short in the first quarter was losing money most weeks.
We look forward to October, or not, as the case may be. You mentioned during that commercial break that actually the next big event really is November, but Mr. Trichet is giving his final goodbye next Thursday.
Well, that's it. I mean, it's the next policy meeting for the ECB, but we're not really expecting a lot to change. It's his last meeting. The likelihood is that he's going to leave the path open for Mario Draghi to come in and set his agenda. So what people will really be looking for is what that agenda is. And obviously, it's still going to be the bailout of Europe, and whether there's been any agreement between the countries on how that's actually going to effectually come into place. And I think people are getting a little tired of just the rhetoric that we're hearing out of politicians. They actually want to see, how are the bonds going to be priced, what's the price, how much of a haircut do the bondholders really have to take.
And the next Fed meeting is in November, the next G20 meeting is in Cannes in November as well. So therefore, October, it would seem, there's no big events, but obviously there are, because as you said before, news flow dictates market sentiment. How does it affect Asia? How does it affect your clients, your trading desk? I mean, is it risk-off completely?
I don't think it's risk-off completely. I mean, investors are there to make money, and it's much more difficult when it's about news flow rather than about fundamentals. But they have to be, agile at the end of the day. They'll be looking for opportunities still. We've seen a lot of poor data out of the US, but relative to what we're seeing happening in Europe, it hasn't really caused much of a stir in the market. If we see some resolution coming through in Europe, then I think the focus is going to turn back to the US and the strength of the recovery there, the strength of the consumer, and whether that's slowing down as we think it probably is.
As I was mentioning before, the absolute thumping that ICBC, for example, has had this year so far, off by 30%. The banking crisis that everyone's talking about in Europe and the US, obviously Asia's feeling the impact of that. I mean, what is the sort of exposure, if any?
Well, I think the Chinese banking crisis is a slightly different one. I mean, people are now worried about the fact...
You call it a banking crisis, then?
I think it is. I mean, people are worried about the fact... Any time that people are worried, it's a crisis of form anyway. But they're worried about the state banks and the fact that historically they had to put money into the state-owned industries. Now, when they were listed, a lot of those assets were taken away of them, and we were presented with a good bank. In the meantime, though, since they've listed, they've still continued lending to local governments and local government vehicles. And the question now is, can those companies, can those vehicles repay those loans? Because a lot of them are tied up with property, and property has been squeezed by the government trying to take the heat out of the bubble that had been created.
You've got a rather pessimistic view on, well, China looking ahead. I mean, you're talking about 7% growth or thereabouts.
Yeah, I mean, there's still growth there.
Oh, I mean, that's huge. I mean,
yeah.
I mean, imagine if Europe had that sort of growth. I mean, look at their eye teeth for it. Yeah. But you like the consumption story?
Well, I still think the consumption story in China is going to play on. I mean, China is trying to develop its own domestic economy. The global market is looking more fragile, so again they've got to look more locally, and there's a growing middle class there. Yeah, so I mean I still think those consumption stocks are going to do well.
Well, it's interesting that you bring that up, Andrew, because HSBC came out with a note saying that net exports accounted for 0% of the GDP growth of 9.6% in the second half.
Right.
And so they're really kind of talking about this kind of domestic consumer class, but at the same time we've got tightening monetary policy, we're trying to slow it down. At what point do we say they've got the money to keep that growth going despite a slowdown in the rest of the world?
Well, I think you have to be clear here. I mean, China is trying to slow down the growth in the property sector, and it's trying to really eliminate the speculative element of that. The other thing to bear in mind is actually that China runs on an awful lot of cash. A lot of the common people in China don't actually put their money with the bank. They still have this fear of the banks, and I guess in the current tumultuous world in the global banks, you can see why. So there is money there to be spent. It's just not necessarily in the system as normal. And that's one of the big problems that China has. There is so much money that is outside the banking system that they can't control, that a lot of these policies, like raising reserve requirements, doesn't have the same effect that it would have in the US or in Europe.
Do you therefore see a banking crisis in China?
Well, there's a different banking crisis which is more to do with how the banks then lend their money and where they've been lending their money. But it's not the same sort of crisis of having to worry about the depositors' money and where that's going, because they just basically haven't put it with the banks.
How about if lending freezes up as it did 3 years ago, and it might be doing now?
Well, as it frees up, then that obviously makes capital purchases more prevalent. So, you see people going out and buying cars. And again, that's been another growth area in China, the automotive industry, that's such that they've, in Beijing, they've had to, issue permits to try and restrict it. But it's something that the people want to have.
One Chinese city, they're buying helicopters, right?
Oh, yeah,
remember
that's
that report Steve Engel did several weeks ago?
Town, where was that?
I don't remember the name, but if you want to live there, you need to be rich and you need to buy a helicopter. So,
but they all have shares in the town. They all have shares in the town. So it's a cumulative thing there.
Yes, it's communist.
Yeah. So they are really working together. But if you go to Beijing, there's a lot of middle-class families, very similar to the US in the late 60s, early 70s, where people started inheriting property from their parents. They'd already got good jobs, they were already buying their own house, and then they got this extra bounce of capital coming in. That is starting to happen in China, because people in China for years have wanted to put the money into their children, to their education, to get them ahead. Now they've got ahead, they have actually got good enough jobs that they don't need to rely on their parents anymore.
The thing is, when does that investment spending, which is actually the key driver of the economy, that's going to stop at some point? And, do we have the momentum then for it to carry on?
Well, it'll be just like the US. I mean, it's starting to stop now because people have got ahead of themselves. They've wound up their credit, and suddenly the ATM of the house is no longer, got any cash behind it. That is probably something that's still 20, 30 years down the road for China, and that's why I think in this next 10, 15 years, China's growth is going to continue. It may slow, it may accelerate, it will be influenced more and more by global policy, but it's still growing.
Did you guys hear about this story in the South China Morning Post? Inner Mongolia, Bank of China, Agricultural Bank of China, there's this banking underground investment scandal where a woman had
arranged loans,
and it's that kind of opaqueness that I think scares the rest of the world, doesn't it? What's going on there?
I think it's one of the things, if you're investing in China, you have to be aware of. The shadow banking system in China is huge. It was made worse in some respects a couple of years ago when China started its tightening policies, because it was no longer worth large corporations putting their money with the bank if they weren't going to get a return on the deposit. There were also restrictions put on the banks as to where they could lend the money. So they decided the easiest thing to do was just to become middlemen. They would introduce Company A to Company B, and they would take a management fee. That then starts this whole shadow banking system going, where people realise that sometimes it's better outside the banking services to arrange these loans. Then you get the growth of trust companies where you can make loans to them, or they can take deposits, and then they split up the loans and share that amongst high net worth individuals. The trouble is it's outside the regulator's control. But it comes back to the fact that 15, 20 years ago, when we had the first of the CITICs blowing up, people didn't trust the government to bail out these companies.
And John's going to talk to you about a certain sporting event.
Time's against us. England, Scotland. Seb's favourite topic. Rugby.
That's it. Planning for a win, eh?
I think so. Scotland.
Well, I think it's going to be a crucial match for both of them now, and I think England still has to prove themselves. I mean, being Irish, I'm unbiased.
To be sure, yes.
You know what? I'll
What's
go
the
with.
score?
Oh God, don't ask me these questions. Just whatever is the popular call.
Oh, really? That really sticking in my cap.
65-3. How's that?
All right. Okay, guys. Thanks a lot, Andrew. Thanks for joining us, Andrew Sullivan there.